all about competing for time, right?
Yeah.
That's why Netflix is where competing with games, right? It's like, are you going to watch Netflix? Or are you going to play games? Are you going to read a book, whatever? But people are choosing to spend, because we're all social human beings. People are, especially more kids, they're spending time, majority of their time in online worlds. So that's the trend.
Yep.
It's only going to get bigger. It's going to be massive.
There is certainly money in Web3 games funding. I think it's just more demand.
speakers are going to tell us about how they can regulate the future of crypto space. And we're very honored to introduce our moderator, Mr. Douglas Arner. He is the Carey Holdings Professor in Law at the University of Hong Kong. He will be speaking with Dong He, Deputy Director, Monetary and Capital Markets at International Monetary Fund, together with Linda Jeng, Head of Web3 Strategy at Crypto Council for Innovation. Please welcome them.
Excellent. Well, thank you all very much, and it's great to be back at Hong Kong FinTech Week. I think after a number of years where we've been in hybrid or quiet mode, it's really great to have people coming in, not only from all over Hong Kong and the region, but all over the world. And I'm joined by a couple of my friends coming in from both Washington, D.C., but very different sorts of environments. And we're going to talk about something that, if I think about the last 15 years of financial technological evolution, whether we've been talking about digital banking, whether we've been talking about crypto, whether we've been talking about data frameworks, one of the constant items of discussion has been regulatory approaches. How should we deal with these regulatory innovations? And I think if we think of digital assets, we're now 15 years after the white paper from 2008, 14 years from the establishment of the first blockchain in 2009. And if we look at the cycle, we've now been through 3 major cycles of up and down in terms of market evolution. And across that period, we've seen a series of major events, in some cases crises. We can think back to Silk Road. We can think to the failure of Mt. Gox. We can think to the ICO bubble. We can think about Facebook's announcement of Libra. And we can think about, most recently, the failure of Terra Luna, of FTX, and the crypto winter. And I think really maybe my question from the standpoint of regulatory approach is, Dong, what lessons are we taking out of these experiences, and what is the direction that we're seeing at the international level from the standpoint of regulatory approaches?
Thank you, Doug. Good morning, everybody. It's such a pleasure to be back in Hong Kong and to be back at the Hong Kong FinTech Week. Last year I was here and I said, the message I had was that regulators are your friends for the crypto industry, and I would like to repeat that message. It's very important for the industry to live in a regulated future. And I'm pleased to report that this year, 2023, is really the year that the international policy community has made a huge amount of progress. Culminating, I would like to say, in the IMF FSB synthesis paper, Policies for Crypto Assets. This is really where the IMF and the FSB come together to bring together both the macroeconomic perspectives and financial stability perspectives of an effective approach to crypto policies. So getting back to your question, how do we think about this journey? What are we seeing emerging in this space is that, of course, we really like to see the innovation, the central banks and the regulators. We very much welcome the innovation coming from the crypto industry. But at the end of the day, we are here for the public good. So we want to make the crypto industry safe and sound and contribute to public policy objectives. So this paper, the essence of this paper is basically that there are macro critical issues here. So crypto industry is not just for games. It affects monetary stability, it affects financial stability, and And particularly thinking from an emerging market and developing country perspective, crypto industry, many of the service providers are located in offshore financial centers, and these developing countries are at the receiving end of these services because their citizens can be offered services from everywhere through the internet. So what does that mean for monetary stability, monetary policy effectiveness in these countries, right? If you can't control your local liquidity, your monetary policy becomes ineffective. If there are failures of service providers, if there are consumer protection issues, that would have a lot of impact on the confidence. Tax policy is also important. Crypto industry should not be a source of tax evasion. So that's very important. So these issues really become front and center when we think about the macroeconomic implications of crypto industry. From a financial stability point of view, of course, there are exposures by the mainstream banks. There are volatilities associated with whole crypto holdings, wealth effects that have also macroeconomic impact. So if we combine the macroeconomic and financial stability perspectives, we think it's extremely important to have a framework that allows the industry to grow in this regulated environment where the service providers are licensed or registered, and the firms have proper risk management systems in place, and all these macroeconomic considerations are taken into account. So that's really where the policy consensus has emerged, and we still have a lot of things to work on. For example, there will be more concrete recommendations on how to regulate global stablecoins for payment purposes, on DeFi. So all these regulations will need to be ironed out. But we have a big roadmap ahead. International institutions like the IMF are working closely with local authorities, central banks, to implement a roadmap so that we all live in the international environment that is coordinated, consistent, and comprehensive. So we don't want to leave gaps so that there will be regulatory arbitrage across different sectors. And we want to have consistency across jurisdictions. That's where the direction of travel really is. And I think it would take a lot of effort for the industry to work with regulators to reach there. But just to sum up, I think we have come to a stage where we want to ensure that the path forward is a stable one. We don't want to see some of the similar problems we've seen back in 2022. You mentioned the crashes and the failures of the service firms in 2022. But going forward, we hope this will be a safe and sound path for the industry to grow, to continue to innovate.
Thanks for that, Jeng. And I think if we think about Hong Kong's context, Hong Kong participates in all of these international regulatory policy processes, and there's a strong connection or reflection of many of the things we see going on here in that context. Linda, I wanted to look at this from a different angle. And if we think about crypto and digital assets in particular, one aspect of the origin was directly as a reaction to failures in the traditional financial sector and a view that perhaps a technological solution was better than an institutional regulatory framework. And so there is this sort of historical tension in the industry. And so it's interesting to see the evolution of industry policy groupings which are interacting in this space. And I wanted to ask, from the standpoint of your membership, what is your view from the standpoint of regulatory policy? Is this the right direction going forward? Is there something else you need or you don't want to see?
Well, Doug, it's really great to be back here in Hong Kong. It's been 5 years, actually, since the beginning of COVID. And I was here last year, but only virtually. So to be here in person, experience Hong Kong, and actually feel the energy. I met with many of the Web3 community builders, and I was just blown away by everything that's happening here in Hong Kong. So just a little bit of my background before I answer your question, because I really want everyone to understand where I'm coming from. I was a financial regulator first and foremost for 15 years. Spent many years working at the Federal Reserve and then also at the Financial Stability Board. And I was probably one of the first US regulators to work directly at a DeFi crypto startup company. And there I was building DeFi products. And then afterwards, I worked at the Center Consortium, which was the standard setter for USDC, the stablecoin, as well as for Verity, which is a decentralized identity standard. And about a year ago, I joined the Crypto Council for Innovation, and I'm leading the Web3 strategy. And what does that mean when you say, oh, I'm telling you this entire arc of my story, and I actually left out something pretty important. Last week, I also launched a tech and policy advisory firm for Web3 companies because of the very fact that I could see that there is a real gap between the Web3 community and the regulatory community, and there's a real need for a bridge as well as translation. And why am I sharing all of this? I'm sharing this because I really do believe in the work of government and regulators. I tell builders all the time that you guys are building products and technology, but regulators are also building regimes. And the nature of money is changing dramatically. We're living in this exciting time where we're actually seeing money transforming as a social as well as a legal construct into something that's going to become programmable money. And what does that mean for policymakers? And what does that mean for us, the individual consumers? And so you ask, what do our members feel about the work that the G20, IMF, FSB are doing? We're highly supportive. We want regulation. If you have clear rules of the road, then you can actually have true sustainable growth. Now, the question is, what kind of regulation is actually going to be one that will ensure safety and soundness, consumer protection, but also foster innovation and real sustainable growth? And that's the real challenge, trying to figure out what that fine line is. And so one of the, I think, biggest issues is really understanding the decentralized features of this technology. I think it is something that's scary for regulators. And as a former regulator, the way you usually regulate is you identify an intermediary, and that's going to be your legal hook into the industry for regulation. And that's usually through licenses or charters. But in a world of decentralized technologies, this is much harder. The intermediaries are different. And it reminds me of, and now I'm sharing some of the things that I am reading lately and my personal interests. I went to Stockholm for Eurofe and discovered the world of Vikings. So I started reading about Viking history, and the Vikings have had invaded not just Europe, but Central Asia, parts of Russia, Ukraine, all the way down to the Middle East. They really changed society back in the 10th century. But what was really interesting for me as a lawyer was the word law, the English word law, is actually borrowed from Old Norse. And the Old Norse word was log. And I was very confused by that. I'm like, what? Vikings are known for, their very violent invasions, their almost barbaric actions. Why would the word law come from a Viking language? And it turns out that structure was a very democratic structure, and it was very difficult for medieval societies to actually interact and negotiate with the Vikings. And there's, a story of a Frankish emissary who arrived and tried to negotiate with the Norman Vikings and asked, who is your leader? And the Vikings responded, we have no king. You have to negotiate with all of us. And that is actually what blockchain technology is like. Blockchain technology involves many different participants, and for regulators, for governments, they have to learn how to be able to interact and negotiate with really a different kind of community. And there is no single intermediary that you can apply regulation to, but there are ways to work with the community.
I think that raises, two issues that I want to hit with both of you in our remaining short amount of time. The first is, Linda, from the standpoint of the industry, where do you see the opportunities, business opportunities, in this new regulated environment?
So one area that I'm very excited about is agentic technologies. This is actually a very new term. I had always called it self-managed Web3 technologies. These are services and products that really allow you, the consumer, to control not only your data, but therefore your digital assets. And what that means is, whatever is in your personal digital wallet is yours to control and manage. And it's more than just financial assets. It's also digital identity assets. It could be your avatars. It could be what you use for gaming. And that is, I think, where there will be a lot of growth, but also major changes for the digital economy. And this is where I think regulators can play a very big role in helping to foster the digital highways, essentially the public digital infrastructure that will serve the public good. And what I mean by that are, decentralized, open source, permissionless blockchain networks that can serve the public and allow the public to also build onto these highways. And this really requires also a public-private partnership.
This is, I think, an important issue, and one that I've been seeing in more and more discussions, which is how do we think about essentially the safety and soundness of these new forms of underlying infrastructure. And we're seeing governments and policymakers actually having a role from the standpoint of making sure that they do work as suggested. And I think that brings us back to really the final point, Tong, and that is, if we think about central banks throughout history of human civilizations have been working closely with the use of technology and monetary and payment systems. From the standpoint of the IMF and the central banking community, you all are active users of these sorts of new technologies. What sorts of directions, from the standpoint of infrastructures or otherwise, are you all working on now over the next year or two?
Thank you. That's an extremely important question. So in the modern monetary system, central bank money, for example, cash, and the reserves held by commercial banks with central banks. So these are the two forms of money, central bank money, cash, the bills and notes, the coins and notes you hold, and reserves held by commercial banks with the central bank. These are the two forms of central bank money. This is the monetary base. And that's a critical function. That is, in a way, the central bank money defines the unit of account of a modern economy like the Hong Kong dollar is the unit of account. So I think even in the digital age, it's extremely important for the central bank to be able to continue to define the unit of account, to make sure that the central bank money is the final settlement asset of all economic transactions and financial transactions. So this is where central bank digital currencies come in, because central banks are inspired by these new technological developments, but we want to also make sure that the central bank operations are integrated with the digital economy, with a digitalized financial system. So that's where why it's important for central banks to take advantage of all the new technologies we are seeing from, for example, the crypto space. All the new ways of organizing financial transactions, tokenization, which is the theme of this conference. How do we make good use of that? But for the new digitalized system to work well, we need a monetary anchor that's still based on central bank money, defined by monetary policy. So that's really a fundamental principle we need to follow.
I think that's an excellent position to wrap up this discussion. And I think it brings together this idea that when we think about decentralized systems, there is a role of centralized and public functions in both helping to develop them, but also to make sure that they function properly. If you would, please join me in thanking my friends and panelists, Dong and Linda.
Thank you very much.
Thank you.
Thank you very much, Douglas, Jeng, and Linda. These